Maruti Suzuki down about 1.3%, reacting to earnings that came through during market hours yesterday. Puneet is joining us in studio. Puneet, what stood out to you and what are brokerages saying?
Well, largely the results are largely in line. It was boosted by a very strong other income portion of almost 1,800 crores versus 900 crores last year. So we saw that impact. But majorly the comments of the management that the second half will see two new launches in the SUV space. One of them will be EVs and the export market doing much better than the domestic one. I think those had some positive impact on the stock at the start of the day. And now just seeing some pullback, and we are still awaiting Maruti's July numbers to see how if anything has changed. So that's one key aspect, but it's expected that the growth will largely be led by the company around the festive season, and the hopes of any kind of growth aspirations will largely be led by what happens in the second half as well. But that's largely the story of Maruti, similar to what Hyundai and Tata is happening as well, that the sales is only quite been visible for someone like an M&M, and that's the key aspect. But we're now being joined by Mr. Rahul Bharti, the Executive Director at Maruti and Suzuki. Mr. Bharti, a very good morning to you, and thanks so much for joining in. Let me start off first with what's working, because it's export that has shown a 37% growth in this particular quarter. And while the domestic sales are down 6%, could you start off with reflecting what's actually working for you in the export market even before the electric vehicle has come into the picture?
So the impact of exports did come in our financial quarter, and exports has been a very fantastic story. And I strongly believe that India should increase its exports drastically and take a larger share of the global trade. This is also true because, when we look at Viksit Bharat, the domestic demand may not be sufficient to meet our ambitions for Viksit Bharat. Our exports grew by about 37.4% in the quarter, taking our market share in cars exported out of India to about 47% plus. And we want to, of course, take it further. Our EV exports will help it further. This, of course, helped to cushion the impact in the domestic market and get our volume growth to positive zone.
Well, the other one on exports was that you've given a target of roughly about 4 lakh export in this particular year. You did about 3.3 lakh last year. And you also mentioned that roughly 60 to 70,000 units will be the EV exports itself. So what's actually driven the growth in quarter one? Is it largely seasonal? Or some positive impact, and do you feel that you will be able to beat this number of 4 lakh comfortably, given that EVs have not even come yet?
Interesting question. So at least as a DNA, Maruti Suzuki always gives guidance or communicates targets which it is confident of achieving. So that seems to be playing out. And we have still our guidance for the whole year remains at 4 lakhs, and we hope that we'll exceed it. And yes, EVs will also help.
I think, Mr. Bharti, with EVs comes the rare earth question as well. Now, we've seen representation of SIAM to the government. We've seen the government also having a conversation with the Chinese Commerce Ministry. My question largely is that do you actually have access to Suzuki's supply chain of rare earth, and does that put you on a path of, if any, problems happen in the future for EV production?
You're broadly right that we need to look at alternate solutions and explore getting supplies of these parts from all over the world. So the solution that we are pursuing is, instead of importing the rare earth magnet, which is a very small part, a sub-assembly or a larger aggregate which will be manufactured or assembled in that country. That could be China, it could be elsewhere. And that will help us secure our supply chain so that our production is not affected. As of now, these efforts seem to be working well. If and when we have any material issue or doubt we'll come back and share that our production seems to be affected. We'll share in case such a problem arises.
And Mr. Bharti, a very interesting trend that we're seeing is that rural markets have started to outperform the urban markets. And while the lines are starting to blur with semi-urban as well, have you seen that for Maruti Suzuki as well in this particular quarter?
That's true. And we have a huge network presence, so we are able to service the rural markets really well. Our service network has gone up to 5,500. So rural market is growing faster than urban, and the monsoon and the MSPs we think will support this further.
And Mr. Bharti, we've seen that within rural market as well, SUVs have actually started to pick up in terms of buyer preferences and premiumization trend. And you've largely been a small car player in the rural market segment. So has that change happened for you already, or do you expect that to happen over the next few quarters?
So, given the the incomes and the prosperity that is coming to rural India, thanks to a lot of government schemes and thanks to the rural integration with the cities, thanks to roads built by the government, yes, the aspiration is increasing with purchasing power increasing. We are seeing a very continuous kind of positive aspirations, and we are providing those products to the rural customer.
And Mr. Bharti, the other point is that margins have started to get impacted over the last couple of quarters. This quarter as well, it's 10.4. It's flat on a YOY basis. But have you seen that largely because of onboarding of some personnel in the Kharkhoda factory, which has just come on stream in February, and with the forecast being very, very poor for just 1 to 2% growth for the industry by CM, do you also see some concerns in protecting the margins for this year?
You're right. Kharkhoda has some initial expenses, which should, over a period of time, get ironed out. There is an element of about 30 basis points depreciation without utilization. So over a period of time, that should also go away as volumes come. And we had this quarter, our overall in Q1, our margins, operational margins, declined by 40 basis points. It was a result of several factors, both positive and negative. So we had adverse commodity and forex of about 40 basis points each. We had lower volumes and therefore lower operating leverage impact of about 60 basis points. On the other side, on positives, we had a favorable mix of 30 basis points, lower advertisement spend of 60 basis points. There was a net 40 basis points fall in sequential terms. And going forward, we'll have to watch commodities, particularly steel, forex we'll have to watch. And the biggest thing that makes a difference is the volume and operating leverage.
And Mr. Bharti, you also had a very interesting update that the Memorandum of Association has actually been amended in this quarter, and you've added fleet as a segment now in terms of mobility. Could you just give us some more perspective on this amendment and what it means for Maruti Suzuki?
Sure. So we have amended our articles of association subject to shareholder approval in our AGM. The idea is to keep flexibility with us because the definition of mobility is increasing now. And as a market leader, we have to think of the larger horizon of the larger mobility ecosystem, which it's not just about UAVs or drones, it's about fleet or operating ecosystem for EVs. It's about vehicle leasing, it's about powertrains, clean energy like hydrogen or compressed biogas and the value chain of that. It's not a business plan. I want to be very clear about it, but we want to keep flexibility on our side and we want to keep thinking how can we expand our horizons in the future.
Well, Mr. Bharti, thanks so much for joining in, giving us perspective for Maruti Suzuki as well as for the industry. We look forward to our next conversation. But thank you for joining us today.